But that's what will eventually happen to all these currencies in Europe. Europe will be kind of the canary in the cage right now, is what we're looking at. But all of these governments have spent more than they can possibly pay back.
I guess the market, someone just chatted in, I forgot, the profit chart is also on the TOS platform, so any of the indicators you see here should be available on the TOS platform for free, I think, right? So, so you don't necessarily have to be an Investools subscriber to use it.
Doesn't that sort of follow the Dow? How
What's
close
that?
is this following the Dow?
Are you talking about the euro US dollar?
Yeah. Where you had the V, the double bottom kind of. Maybe it's a little more dramatic.
Well, it's moved a little bit ahead of the Dow. I mean, it's been going down since about December, and it's right about now the euro's at support level. So support level, and potentially that could be a hammer as well. It's a little subjective, but
Yeah, there's a hammer before, another hammer.
That's true, yeah.
yeah. So it looks like,
And even with confirmation, and then
you know, so it's at a support level. You see a hammer. I mean, it's the probabilities are likely that it will at least find some temporary support in that area. The market sentiment line is near the bottom. Hasn't turned up yet, but the green line here is starting to turn up. Something to look at. I wouldn't say that it's a definite or anything, but so if the euro US dollar is potentially finding support, what does that say about the markets, the US market? Anyone? Bueller?
It has an effect on the commodities, it's not the market. That's what
Right.
I'm trying to
Yeah.
understand. Yeah, the
And the
US dollar
commodities,
going up, other things are falling down. Oil
Right.
and gold and things like
you would think that they would be going on spending sprees in the United States, right? They are not. You know, and it's way too expensive for us to go over there.
yeah.
I mean, very few. I actually just got back from Italy, and there were very few. It's really the down season in many, many ways. But why aren't they here, having fun, enjoying our Disney?
They're buying up Miami.
Well, maybe they're buying up Miami, but they're not spending enough money to really influence the economy.
So if it affects the commodities market, then how does that affect? How does that relate to the stock markets?
Weaker dollar usually helps the stock market. That's what's been going on.
Right.
So we want a weak dollar.
ultimately you want them both going up.
Right.
The dollar will go up and the market will go up, and that'll show you that there's a healthy, something real maybe there.
When's the last time that happened?
Yeah. There isn't anything real there. That's the problem.
Do you guys remember when the last time that happened? Twice.
Oh,
Ronald Reagan was president. Mid-'80s.
Yeah, it's about
Yeah. Was it? Okay, all right, so let's take a look at the SPX. Oh, it starts here. So the S&P 500. Then you start seeing patterns all across the board, like, okay, so on this day we had hammer patterns on all of them, and they're all right here for Fibonacci support, right? So that's where you start thinking maybe something's up. But, I mean, there have been times when I've seen those kind of patterns and they failed, but more often than not, it generally works out. But how I use the market sentiment line is now it's trending down, even though this is going up. If the market sentiment, what I found anyway, if the market sentiment line is trending down or up, even if the market is going in the opposite direction, not always the case, but usually the case, if the market is going in the opposite direction of the sentiment line, typically that opposite move won't have as much momentum to it, won't be as strong. So it was trending down during this time period, and so that's why the downward move was so pronounced. So unless we see this turning back up again, this upward move won't be as pronounced. So for the time being, I would project we're kind of in a sideways pattern. But if we start seeing this turning up, and this breaking above this line, and we're in an upward move, then I'd say that it's probably strongly bullish at that point.
They do an iron condor on the SPY.
You've never seen him.
You did an iron condor?
No, I mean, it's round.
Oh, yeah, exactly. It's potentially a good,
Sure, it's a sideways.
That'd be a fun trade to try and come up with.
Yeah, the only
Figure out
thing,
good probabilities and where you can make some money.
yeah, the only thing about iron condor right now is iron condor is it a credit or a debit strategy?
Credit.
Right, and where's volatility right now?
It's a,
I don't know, actually, let's take a look.
25.
it's still on the low end. but
So it's gone up a little bit.
So you're
The
saying
VIX.
it's not.
Well, it's 22. You wanted to do it on a
So the
higher
VIX is,
volatility.
I mean, it's gone up a little bit, right? It's about 22. We were down, way down here. 22.73, it looks like.
It's low.
So it's kind of low. So what that means is credit strategies are not going to yield as much of a credit. So anytime when you're selling an option, if you're doing a spread or something like that, iron condor makes you more money if volatility is higher. So back here, iron condors were better in one sense. I mean, the credits were higher, so you could span the wings out further on the iron condor and still make the same amount of money. But the risk is, if it goes down, then you may still have a big market movement. Iron condors don't do too well by themselves if the market moves wildly. So right here, yes, you could do it, but you're going to have to bring the wings a little bit closer on the iron condor. But volatility is low, so it may not move much anyway. So the movement may be contained in that time period. But premiums are a little bit lower.
So you, I guess what I'm hearing is you have different styles of trading. Like you don't do an iron condor right now. And it's like, would you be like doing covered calls right now?
Calendars, maybe, or diagonal.
Calendar, what's?
Yeah, well, see, it depends. I wouldn't say that I wouldn't do an iron condor right now. It just depends. Everything is going to be dependent on the situation, my trading style at that time, what I'm trying to accomplish, if that iron condor is part of a larger strategy of trading or if it's a standalone trade. So generally speaking, like Don was saying, you want to do buying strategies. Like a calendar is, if you buy a calendar, it's best to do that when volatility is lower, when you expect volatility to increase. So if you were to have bought a calendar when the market was at its low, when you were seeing those hammer patterns, assuming that you expected it to stay within a certain range, but you expected volatility to go up, what happens is as volatility increases, you make money on the increase in volatility as well. Right. So whereas in an iron condor, if you buy an iron condor when volatility is low, you not only don't get as much credit for it, you got to bring the wings in closer, but it sort of works against you as volatility goes up. Doesn't mean you're going to lose money on the trade, but it works against you. You make more money on iron condor if volatility goes down while you're holding the iron condor. It makes money faster because the decrease in volatility, it has an inverse relationship to volatility versus the calendar, which has a direct relationship to volatility, assuming you're buying the calendar, selling the iron condor. So yeah, there are different strategies for different things. And then there are butterflies and all kinds of things.